So come on, come and sit, please. This is the fun part. So please come sit down. This is the best part because now we're all allowed to play the devil's advocate and ask all these hard questions about, is this really true? How good can the story actually be? So feel free to raise a hand, and there's a microphone for all the questions you might have. It was fantastic to hear all these presentations. Thank you very much. Where to start? Well, I'll start with a list of questions I got from one person in the audience. Was it you, Björn? Yeah. It's about if it's possible to define and quantify your market. You did that a bit. You say you've only scratched the surface. Could you just elaborate a bit more on who's in that market? Who are your competitors? What do you meet out there?
Yeah, so if we define how big the market is, I think you could see like spend on like the top 3 integrators per market, for example. You can also see the different penetration that you have in the Nordics compared to most other markets, for example. And there is market reports that I can recommend, like Invidis is the consultancy firm that actually perform a report where they look at the market. But I think the most efficient way to look at it ourselves is that we look at all the wanted brands that we want to have. We look at how many stores they have. And we also do assumptions on how many touch points do you have in a certain vertical. So with this as the foundation, we can see that this wanted 50 list had this growth potential. This is where we are today, like at which penetration level do we have at a specific brand today in a specific market or on a global scale. But the closest to a number is that what we mentioned, that the 250 largest brands and retailers, they operate 1.5 million stores, and it's an addressable market of 15 million licenses, just to take like the top brands.
But can you elaborate a bit more on who you meet when you go after those brands? Are there thousands of companies out there, or do you meet always 3 competitors, or what does the landscape look like?
Yeah, so that's a very good question. So the traditional competitors come from the AV industry, and they have a product for digital signage. And just like Damien mentioned, it's more of like, how do you schedule images, videos, content on a display? And so of course we compete with the traditional digital signage players for more simple, low, high volume rollouts. And then to a certain level, you could also argue that you compete with platform products that are used to create content or dynamic content for different channels. But I think we have a unique position, and it's a position which we want to capture, and it's really to be the IXM platform that we focus on in-store experience and ranging from brand to tactical communication all the way to transaction. And but to give you competitors' name, like the companies that we usually meet in large tender is Scala. We actually, when we started off in my apartment 2008, we worked with Scala. Daniel Block, now Chief Product Officer at DICE, is what employee number did you have at Scala? 3. Yeah. And we also meet Navori, for example, which is a company that are strong outside of Europe, and there are some others.
And can I direct that question to you, Damien, as you work as a partner to DICE? You said you had 80 brands. How many do you use DICE at? And do you use someone else like Scala, or how does it work for you?
From a history point of view, we have a really single platform strategy. What I mentioned in the presentation was we really want to be a full service provider for our customers. And in order to kind of like support him in all the ways, from installing, from configuring the system, to maintaining and even help him to do the right content at the right time, I personally believe you need to focus on as less as possible platforms. Otherwise, you are more into the project business, where you basically install a solution and then give it over to the customer. But to be just on one, yes, maybe we open up in a certain way, that can be. But usually, currently, when I talked about the 80 brands we have, all running on DICE.
Would you say that that is a trend among companies like you, that you go for just one? So it would be a trend which would be good for Vertiseit, or is it a choice that you did?
Basically, it's a choice that we did. What I see a little bit trending, but it's not kind of like fact-based or anything, it's that a few companies try to single out or converging to less platforms, yeah. But I couldn't tell, I don't have the market insight on the different topics, especially in Switzerland, on how many platforms they in the end effectively work. That's beyond my knowledge, to be honest.
Okay. And Roland, I had a question for you. I think it's interesting. Could you tell us about what happened when you were acquired? Did they find you? Did you find them? And what was your experience?
Well, I can tell you that they found us. So at that time we were not for sale. I received an email from Johan.
No reply. No reply at first.
Yeah. That he would like to set up a call with us because he would like to acquire us. So that's the direct Swedish way how to communicate. And it was true that so we replied. We had the first call, but then we thought we were not convinced what it really brings us. So then we were a little bit lazy to reply for the next call. But on the next call, they convinced us that a joint strategy could really work. And and then speed came into it, and it took only a few months until everything was settled, and we became one company. So
and
it's
now,
it was a strategy. It was a really convincing strategy how to move forward in the future.
And now you are working with getting this platform together so you can bring on other companies. How would you say, how much easier would you think an onboarding would be today or when you're finished in the next year compared to when you were onboarded?
The problem if companies, so that's also what we see at competitors or at other companies, if you acquire companies that have their own platform, then in the end you have a mix of 10 or 15 different platforms, and there are no synergies. That's very difficult to operate, and it provides no way forward. And our vision is that we bring the best capabilities of new platforms or of platform from people or from companies that we acquire to the same platform. So there is some development effort needed, but it's a lot less. But in the end, we have then one platform, so the IXM Grid platform, and this is a forward-thinking strategy that provide much more room for the future to growth than with competitors that have then 10 different platforms and no synergies between them. So it's the basis, being able to get the most out of acquisitions. Because if you have 10 different platforms, there's no synergy, it's just hassle.
Do we have any questions from the audience? Yes, we have one.
Thank you. I want to get back to the discussion about platforms and partners using multiple platforms in some cases. Some big partner does, like Pixel Inspiration and Treason. How do you ensure that they prefer to work with your platform?
That's a good question. So I think from the perspective of the full service provider, and when we started the business, we were one of those. Where we worked purely with Scala at that time. And I have the same philosophy as Damien. So if you are a full service provider, you should take care of everything, all your processes in your company, all the knowledge. If you can stick to one platform, it's a huge advantage. So if you are in a position where you actually can state which platform to use, you will choose one. But you can also see other like go-to-market strategies which we have, where we have different parties involved, and then the decisions can be made not from one full service provider. They can be made IT department decide upon the platform. You have digital agencies that work with the marketing teams. You have different integrators that roll out the hardware in different markets. And then for the integrator, that of course also acts as a full service provider in many cases, they need to work with the platform of choice from the brand. So if you look at one of our biggest like integrators, like Treason, if you go into their support facilities, there are people that know and can manage like 15 platforms.
So I had a question for you also, Sebastian. You talked about your growth through partners. So you try to grow by signing new partners and partners growing. Could you elaborate on how much that growth is from those two sorts of growth? And how you emphasize what is most important for you? And
It comes back to what I tried to present also is the time frame of it. We know that signing a new partner, getting them on board and getting the first licenses orders takes us somewhere between 12 to 18 months from initial contact. So it's a long sales cycle, meaning that we have a few of them going on at the whole time. But also ensuring growth here and now is working with the existing customers, existing partners, and helping them secure new brands and growth of their existing brands, making sure that Damien's happy so he can evolve and get new channels, new networks going for UBS, for example, which is something we can more control here and now. And then for the future growth and the leverage, we want to add more partners in new territories. As we saw, we're quite well covered in Europe. There's a few more countries that, of course, we can add partners in, but we're focusing more on the North American market now, as that's quite untapped resource for us at this time.
So do you have but it's the same salespeople, or do you have new sales and?
As the sales team is quite efficient and small, we're only 30 people in total. We're 4 people in the sales team. We do there is a difference between who mainly focuses on the retention of partners, and a few of us mainly focus on doing the initial meetings and drumming up the business in some sense. So
you're the first drummer. That's you.
I'm part of the first drummer, yeah.
And I also want to add something to Fredrik, because I figured out when Sebastian answered that we might not even answer the question also what make them select you. So I think one component is, of course, to have the most appreciated products, the most easiest user interfaces that they want to work with, that it's an open architecture that is easy to integrate with, and that there is a lot of like ready-made integrations and so on that make the life easy and efficient. But besides that, it's really important to be strict on the go-to-market strategy. So the DICE partners, for example, they know that as long as Damien deliver on the growth targets that we have, that we don't need any more partner in the market, and that we actually only sell through partner in that channel. We have well-selected partners, and we also have actually a business model that make the partners loyal, that the more licenses they have, the more they have proved themselves to be able to both roll out and to keep customers happy, the better terms they should have. So if you're a new full service provider that happens to be a partner in the market, then basically, if you have proven yourself, your chance of winning is higher.
So you have many figures that are impressing, but one of them is this net retention revenue, and you've said it's going to be over 100%, and I think it's never been lower. And of course, if you compare to other businesses, other sectors, or other competitors, it's a high figure. But how high can it be, and what could you be aiming for? Because it seems like you have these recurring.
Yeah. So right now it's slightly above 50% of our organic growth is from expanding on existing customer base, and then I include that we are obviously also churn customers. And what we can do is to improve that is to have larger customers with rollouts in more markets and more brands that we actually deploy the platform on a global scale. Then I think we could ramp up like additional 10% growth in long-term perspective. But now I think what was last quarter, Jonas? It was somewhat like 9% or no?
103.
103%. So it means that on a yearly basis, I think we were at 9% or something like that.
Yeah, 109.
Yeah. So it's quite impressive. So if you have like 9% organic growth from existing customer base, including churn, then you only need to add like 10% new sales to meet the figures that we have.
Any more questions from you guys? Or anyone else? Yeah, please, Frederick.
I'll take another one. Could you elaborate on the process of gaining the new partner and customer in Dubai?
So actually, I've not been really involved. Maybe Roland or Anne? Roland, yeah.
We have a new partner in Dubai. It's called Digital, and they approached us because they are already running a network. It's mainly a Do network with over 3,000 screens, and they want to have better programmatic features. So they want to have the advertisement more focused than they have it now. They are working until now. They were working with Broadsign, and we have. They are working now with a Swiss company called Vertiseit, who's providing the programmatic approach, the targeting or the detection of the people in front of the screens. And together with Vertiseit, we also already have successful projects in Switzerland, like for example Spar Switzerland is using this combined technology for a longer time now. And so we were approached because we can deliver the technology that Broadsign cannot deliver. and the start now is with the metro, also the subway there. But if that works properly, that it will be expanded to the whole network probably. And also we are starting now together with this new partner, because it's not then the partner for the single project. The partner will deliver other projects with us, and we just started with the first retailer with a pilot installation. So that's then retail media business, and so we expect a lot out of it, because it's a huge market. But you have to understand this market; it's different than the DACH market, and with a partner like this that grew up in this region and has all the contacts and the network and knows how business works there, that's a perfect fit.
And you had a graph describing your customers and the base of consulting, and then a triangle on getting the SaaS revenue to increase. Is there sometimes you have customers where you never get them on the SaaS? And what happens in those cases?
No, we always start with a license agreement. We don't do consultancy work before we have a license agreement with the customer.
So they're stuck with you.
But what you can say is that from an historic perspective, many companies in the business, they do like consultancy on speculation, basically give it away because they can gain it on SaaS revenue further down the road. But obviously you never know like how our project will scale. But what we do now is that we are really strict on the principles of consulting. So first we sign, of course, Dan mentioned the framework agreement for licenses before we start doing consultancy work. And if it scales, good. But if it doesn't, we always like cover our costs. So we don't do like any consultancy work on speculation.
So Jonas, these new goals you have, you've talked a lot about them today. If you have to prioritize between them, what is most important for you? Is it the growth or is it the profitability?
I should say, like...
Was that
The question was there.
What? Sure. Oh, Jonas. Good. Good. I hear you. Then Jonas, maybe give another answer. We see.
Whereas I can answer, so then you can see if it was... Yeah. No, I mean, we should always be profitable, meaning that we should always be independent and self-sufficient and able to take our own decisions without having to rely on external funding or external investors. So that's the foundation. We need to be above zero. But when it comes to being really profitable or having a high growth, we believe that there is so much potential in this market for so many years to come that we will put, if we have to prioritize, we will prioritize growth over profitability, meaning that we will still be profitable.
It seems to be the right answer. Because
100% correct. Flawless.
Nodding. Okay, so you've talked a bit today also about how you build this platform for adding on, and you talked a bit about what type of company you're looking for, but could you be a bit more specific? Like, what is your dream target? How big should it be? Is it the US? Is it Europe? What? Yeah.
I think like we really need to step into the North American market at some point. Like, and in this game, you don't know. Like, timing is hard, so you need to play where the puck is or will be, but you don't know when. But if we can decide, like next year, for example, will be a great year to enter, and I think. Before that, we do a lot of initiatives now. I was in Toronto last week together with Anne, for example. And we work with some partners now to get to know the market. But the best, like from a scalability and strategic perspective, finding like a small platform company, but at least like in the size of like 20 people with an installed customer base, sell through partners, and a pure platform play. I won't give you any name, but if we can find that, it will be like the best possible fit at this stage, and it will be like the acquisition that brings us to a really important stage. Yeah.
Will it be expensive, or how has prices developed in this market for acquisition targets?
It's hard to tell because there were a lot of activity and we knew the price point before basically the pandemic, but afterwards until now that have been basically zero transactions in the industry. There were a small one just last week, but so it's hard to tell. But I think we can see that it's a lot of like smaller players that struggles a lot. Also some big more buy build groups that have a hard time. So I think opportunities will definitely be there.
My last question comes from Björn. He's playing the devil's advocate, and he's saying, what threats do you foresee in the future?
Like I think there are a lot of threats, and I always get like questions, oh, what is Samsung doing? What is Adobe doing? What is Google doing? What is, like there is obviously we navigate in a space whereas there is a lot of like large players out there. But I can take you like full circle because I think this is relevant to see like why I think that we are in a good position. So if you are an LG or a Samsung, you want also recurring revenue. So they have like basic digital signage platforms that you could buy from them. Samsung has gone the furthest now with a platform that you can buy online, swipe your credit card, you can download apps, but it basically for the long tail business, and it doesn't aim to be sold through like Damian or full service providers. So that of course will capture long tail, but it doesn't really affect us, at least not short term. And because you don't want to have a platform that is tied to a specific like hardware brand. Why would you? You know, you will be, if you are McDonald's, you don't want to be forced to use like Samsung displays. And then you can look at why don't Google step into the space? And obviously they are already in the space. They try to establish Chrome OS as a standard for media players. And I think it's on that level where they will stay because of course it's scalable to sell Chrome OS to all digital signage providers. But it's too small of a business to do like niche applications on it at this stage at least. And so far they haven't really had, they have a really small market share with Chrome OS, but it might grow. It's a good platform, to be honest. And then we go to like the Adobes. So we do a lot of like integration to the Adobe universe. So they have experience platforms where they are designed to actually create content for all different channels. And they have done, historically, they actually had done some small efforts to do applications to run on displays as well and connect it to their platforms. But without success, and it's no big teams, no focus, no investment into that. It's really old school now, dated products. And I think from a strategic perspective, it's better for them. Don't to don't be like the actual touch point to be at the end point. Is better for them to be like on a strategic level where they can integrate to other platforms such as ours. So I think we're actually in a sweet spot as how it looks today. But of course, threats is always if there are changes in technologies or if there are changes in strategies for platforms that are connected to ours.
But it seems you have an opportunity in where you are.
Yeah, so I
you
think
can
it's better
always
we stick there.
twist it. So are there any? Yes, we have one, please. Just wait for the microphone, please. It's coming.
Hello, my name is Thomas Falenius and I'm a shareholder. I just want to ask you, has anybody tried to buy you? And if so, what has been your answer?
It's many times. Not so much though, since we since we're now publicly listed. But and the answer is always no. We want to continue this journey. So, but from time to time there is. Some years there are many. Some years there are few.
And perhaps someday the price is right.
No.
Okay. I'll leave the floor to you, Johan and Jonas, if you want some concluding remarks or just saying thank you to everyone, or.
I think we can summarize with thank you everyone for investing like a whole day together with us here. And as I said in the beginning, like so many people here that have been with us from the point of IPO and are still shareholders, and hope that when we summarize this goal period that you come here again and hopefully we meet those targets and can put new one into play. So Jonas, do you have something to add?
Yeah, you don't need to wait until 2032 to be in contact with us. So in case you have questions, want to know more, never hesitate to give me or Johan a call, send us an email, or come by one of our offices for a coffee. We're always open for discussions and really love meeting investors and analysts and all people interested in the same things we are interested in.
Great. Thank you, everyone.
Thank you.